Usually the market goes in an upward trend, and then I can do breakouts based on that until the trend changes. And that's usually when I have a losing streak, when the market changes, the market dynamics. So when that happens, I do have limits to protect myself, to avoid acting on emotions. What I do is I only maximum lose 2 trades per day or 4 trades a week in a row. So I have limits, because usually what happens during the week is that the market changes its character, and then after a week or two it stabilizes again. So by me protecting my emotions by managing the amount of trades I can place, then I'll take a lot of the emotions out of the picture. The way I handle it is to limit the amount of losses. The second thing I do is also to take a small break then when that happens, when I do have a losing streak, because usually I do get emotional when I do get a losing streak, in the sense that I hate losing. What I do is I then analyze the market, what went wrong, look back at my trades that I lost, look back at the market, and then figure out where I went wrong or what changed to have these losses occur. The trading life, so to say, it's not just rainbows and butterflies. It's definitely a lot of periods of waiting, a lot of periods of losing streaks. I have around a 52% win rate, which means I actually lose half of my trades. And it's just to be patient, to wait for the A+ setups to occur that I know will make me money over time. So when you have enough experience and you have enough trades, when you know that, well, there is approximately a 37% risk that I lose 5 trades in a row. But I also know that that will change if I have a win rate of 50% over a time span of around 50 trades, as an example. The key things I do to get through those moments when it's really tough, I think it's 2 times a year. In my head, it's like I have forgotten how to trade. I have losses, I place a trade, I lose it. It's like, what is happening? And it's usually when I get bored, right? And the market might just have changed character completely. Number one, I think the key is to know yourself. And the way to look at wins and losses in my head is as if you're running a business. You have income and you have expenses. The losses in trading, they are expenses. It doesn't mean you've done a bad job. It's part of the game, equally as a big part as wins or profits are. So the way I handle it is I have to have a limit. I know if I have 2 losing trades, my entire being is screaming overtrade, I want to make those money back. So what I do when that happens, I close down my computer and I go and do something else. Could be a workout, could be a walk. That is one of the keys, right? Changing the energy and state, but also repeating those phrases for myself that it's part of the game, it's a business, I have expenses, I have profit. It doesn't mean I'm bad or good or anything like that. I call it like a trading swamp as well, right? When the market changes, you have a losing streak, and that sucks. But I also know that if I have 4 losses in a row, I need 1 good trade to take me out of it. My biggest losing streaks, sometimes had really big drawdowns, those a few years ago now, has been when I've just been over trading. For an example, let's imagine the stock or the asset goes down and you go in and you hope for it to go back up, and then it goes down, takes you out, and then you keep going in because now you're getting in at even better prices. You do have a stop loss perhaps, right? But then get stopped out many times, which is unnecessary. What I'm doing now is I have certain rules that just protect myself from myself, essentially. I think the way I handle it is a few things there. So yes, change the energy and state. Number 2 is that I also have rules, protect myself from myself. And number 3 is to know your data. So I know my data and statistics and know if I just follow my rules and strategy, I will be profitable over time. Maybe not today, maybe not this week, maybe not this month, but over time, I will average over 30% a year. I trade maybe half an hour to an hour a day because I swing trade. I think the higher the time frame, for me at least, it equals less emotions. I might hold a trade over 1, 2, 3 days sometimes. Sometimes it's within the day, depending on what happens, if I catch a really good breakout or a good demand or supply level, but I swing trade. So for me, it's not as emotional, because if I were sitting, and I have been day trading, if I sit 8 hours a day in front of my screen, it really consumes you, and energy wise as well, at least for me. So I'm more of a swing trader, but when I have had a bad day or a bad week, yes, it does affect me a little bit for sure as well. And when I started my journey, I think I did 40 or so courses, and I watched all the YouTube videos, and I learned a lot of strategies. A lot of those strategies actually do work. I think all you gotta focus on in trading is to get an edge where you have a higher probability of succeeding than not. That's one of the parts. The second part is when you win a lot bigger than you lose, to put it in an easy way, right? So if you can lose 3 trades, and then for every 3 trades you win 1, and then that covers those losses, you will likely have success over time. The challenge is that whenever I think people have a losing streak, they then swap strategy and they do something else. It's not working for me. I've seen traders, they have 6 months of a really good streak, and in 1 month, they lose everything because they just lose it for one day. And the market is relentless that way. I think a lot of the gurus' strategies, they do work. And I think what they're teaching probably works, but what they're missing, and what I missed, was to put in the time and effort to make it work. That's the big difference. And when I say to make it work, it means that you need to backtest 50 to 200 trades with the same rules, and you can tweak certain things, but with the same rules to get the data. You gotta know your win rate, your expected value, your drawdown, all of those things. No one does that, right? They think that this is something they can do for a week and then they're gonna be rich. And what we found among our students, right, it's around 8 to 12 months to be successful. Now, to learn the strategy, we're looking at maybe 2 months. But people then, they need to switch strategies a little bit, then they overtrade, they have their rules, but they break their rules. So that's why we say it's 80% mindset, which is why we have a psychologist, and it's 20% strategy. And most gurus focus on strategy because that's what people want. It's to get rich quick, it's a lifestyle, it's seeing that you place a trade and you make a lot of profit. You need to experience drawdowns, you need to experience when you break your rules, you need to learn so much about yourself, and that journey takes time. What we see in our program is the sweet spot seems to be 8 to 12 months when you have a mentor, coach that supports you through the journey. And we don't need to go far to see how this works in real life. If you look at someone that's gonna go to the gym and get in shape, what usually happens, we know the facts, right? They sign up and they never go, kind of, right? If you have a personal trainer, the odds increases dramatically, but still it's a journey. I mean, the amount of different diets that are out there is enormous, and people go, well, the keto didn't work for me, let me try this one, trying to find the holy grail. And it's the same here, but the equation is quite simple. You know, you put less calories in your body than you get rid of, right? In trading, the equation is very simple, but it's the human element that makes it take time, and that is the same with everything in life, I think. If I was a new person approaching this space, I would get a coach and a mentor. In hindsight, that is easy to say. I didn't lose hundreds of thousands when I started with my own money, because the problem with trading is you can really have a really bad strategy and you can make a lot of money. You can be lucky for a long time, and then all of a sudden the market will punish you if you are not following the criteria, like having a stop loss, you're risking too much. I know one trader, he turned, I think it was 20 Bitcoin to 200 Bitcoin in the bull market because he just kept going up. He has more margin, right? More leverage. But then when the market turned around, he lost everything. You can be lucky for a year. You can be lucky for a long time. So that's the key of getting a system that really works. So I would definitely get a coach and a mentor. Then I would be on a demo account, getting the data. So using a trading diary, getting the data. And when you have the data, then you could start trading your own money. But then we have the human element and the psychology of trading your own money that comes in. Now, what I found among myself and our students is that prop trading is a great way to start learning, and yes, to make income as well. It's not easy. It's very simple, but it's not easy, as we usually say. Make 10% is the usual part in step 1. In step 2, you need to make another 5%. But then there's drawdown limits. You can't lose more than 5% in a day or 10% in total. If you do, they keep the money you pay for the evaluation, and then you gotta do it again. Most people treat this as the casino. That's the problem, right? It is a casino in that way. But I believe that when you have done the demo and you learned how to trade, I think it's the best thing you can do is to go to prop trading. Why? Because it teaches you that you have to keep your risk management properly. What I did was I put 50 grand into an account, my own money, because now I can trade. And I lost all of those money. Now, if I did that with prop trading, I would have paid, let's say, £200 for a 50k account. And if I just completely lost it and I overtraded, I would have lost those £200 instead of 50,000. That's the beauty of prop trading, I believe. So I think there's a great space for it in the market. The payouts worked in the following way, usually with FTMO. When you have passed the evaluation phase and you go live, they still say you get virtual money when you go live. So in the third phase, and because with regulation and everything, now you still get a profit split. So you get in the beginning 80% profit split, and you can work that up to 90% even. So the intention with a prop firm is you trade the firm's money. Like SMB Capital is one of the most famous in New York, and they have the entire floor filled with traders that trade their own money. That's what a prop firm really is. Now these new ones, there's a lot of kind of chatting circulating that, well, they might pay out, but they make all their money from evaluation fees. Might be true, might not be true, I don't know. But what should happen is, if you can prove you're a profitable trader, they will then copy your trades. That makes perfect sense. And if you make 10 grand, they make 100 grand. That's what a real prop trading firm would do, right? I give you capital, you keep a great profit split, but I make 10 times as much. I don't know if they're doing it or not. But what I do think is it's a risk reward game. If I pay £500 for an evaluation, that's my risk. So if it is a scam, that's all I've lost. Most people spend more than that on a dinner or a pair of shoes. I think it's worth it against what you can make. So then when I go live and let's imagine on a $100,000 account, I make 3% profit, and you get your valuation fee back, by the way, and you will get a really good payout from that. So 80% of those 3,000 that you made, the 3%, then it's profit from there. So as long as you're sensible about it, I think it makes perfect sense. It's a risk reward game. It's actually an income of service. You're doing a service for them, so it's an income of service. And then you can use that money to invest or trade or whatever you want, or buy more evaluations in other prop firms. One of my great mentors, he heard about this with AI and robots and virtual trading 20 years ago, and they said, yep, this is the end for traders. And here we are 20 years later, and nothing has really changed. I always think there's going to be a room for retail traders. I do think AI indicators and even robots are incredible tools. If you're going to be a pilot, nowadays the planes fly by themselves. However, you gotta be a pilot. You need to know what to do when things go wrong. And this is the same here. Most robots that I know, they have approached me a lot and they say that, well, this is great back-tested results. I say, great, give me 2 years of real data and then we can talk. And none has come back to me just yet. We have created robots as well, but that's been based on the strategies that we know. So then I know when to turn it on and when to turn it off. Let me give you an example. Imagine you have a breakout robot, right? It's going to work really well when you have really nice breakouts in the market. But when the market changes character and it starts ranging, then the robot will have problems because it's going to do fake breakouts all the time and you will have a big losing streak. So it depends on how you program it. Now with AI, of course, it's going to learn all the time and it's going to change the approach. I've never seen that working yet, but obviously I'm not a programmer.